Hello, everybody. This is Joshua Hayes of BigWaveTrading.com coming to you with the March 30th stock market wrap-up for you to use on March 31st or any of the upcoming sessions this week, as I am not a day trader. I'm a position, used to be, hold from anywhere from 3 months to a year on the majority of our longs, but it's not happening right now. So I just want to make sure that you guys know the time frame I'm dealing with. Daily, 2-day, 3-day, 4-day, 5-day charts is what I deal with. I do not deal with intraday patterns unless it's the final hour of a market session. Charts like this interest me. Charts like this do not. So just so we know where we're going to go. Anyway, let's go and just do the stock market wrap-up. It was a pretty ugly day today on the New York Stock Exchange. It lost 3.88%. Volume was higher, which does give it another distribution day. I do believe this gives it like 2 distribution days in the past few weeks, and that's just something to keep an eye on. It's bad that it couldn't hold the 50-day moving average. Let me go all the way out actually on my plus sign so we can get the chart's full action shown here. And as you can see, volume was still lower than the 50-day volume average, which gives some comfort to the decline. However, the relative strength line, an extreme, very weak break of the previous little base here. As you can see, it's still holding the lows there, and as you can see, the relative strength line broke to new lows. So underneath, it's probably a little bit weaker than what it looks like on the New York Stock Exchange. Let's look at the S&P 500. And as you'll notice, the S&P 500 volume is larger, giving it a distribution day also. The 3.48% gain is bad. Only good news is in the last hour, there was a little bit of support on the index, and that's always positive, I do believe. And with the lower volume, of course, than the overall 50-day volume average, that's a good sign. The NASDAQ had a bad day, but look at its price action. It actually had a very good-sized tail intraday session. It was down at one point, maybe it was down bigger than 56 points. Maybe you guys know in the early hours. I don't really care. But I know that in the late hours of the session, I don't believe I saw it personally get bigger than negative 50. No, wait, it did hit negative 60, I think. So it did get down there to negative 60. I do believe late in the day, whenever I was watching. But no matter, it's how it closes. And it closed only down 43 points. And basically, when I started to watch it, the index was already down 50%, so it was a better close than anything I saw all day to it. And another comforting sign is that not only is volume lower than the 50-day volume average, but volume is lower than the day before, so the NASDAQ didn't even have a distribution day. See how the small cap S&P 600 looked? You can see it has a big tail, still below the 50-day volume average. And I actually want to show you the IBD 100. Take a look at it. So as you can see here, it was down almost 1%. 1.53 is 1%. So leading stocks held up much better. And look at the close. Is that a weekly? That's what got me in trouble. Yeah, it is. That's what got me in trouble last time. When I was analyzing the IBD 100 index, I was kind of using a weekly chart and not a daily chart. So that's where I screwed up on Friday. So I do apologize for everybody who watched the video that was going, what the heck are you talking about? The IBD 100 up 4%. I got it up like right around 1.5% on Thursday, and I got it down for the session on Friday. So that's what happened there. But today it's a little bit of good news. Not even down 1%, while the NASDAQ is down almost 3%, and while the New York Stock Exchange is down 3.3% with the S&P 500. So we got to call that a victory, a small victory. Let's see if it was the same way with the IBD 8585. And it was down just a little bit over 1%. Still a very bullish tail, closing the upper end of its daily range, just like the IBD 100, showing you that leading stocks did not have nearly the negative session that the market did. And in confirming with that, out of the 18 longs that I have, there were no new longs tonight. However, there were no full sells. There are 2 partial sells that we do need to make on our longs because they're not going up immediately. If something doesn't go up immediately, we got to get out. And I know it sucks, and I know there's some cute commentators out there that are saying, oh, if you buy now, you're buying at the top, and if you sell now, you're going to be selling at the bottom after today's 43% down. You got to learn to buy the dips and sell the rips. You know, if you trade like that, whenever you get a 2003 bull market, you're not going to get a 2,300 to 3,000% gain in Taser. You're not going to hold a Cena up for 1,000% like me or a Sohu up 1,000%. I've decided after reviewing some market people that are up a good amount since the end of 2007 by reviewing their strategy, that I am very content at being the up around 40% during this time. That some are up 200, 100, some are up 50%, which I'm close to. I decided that, you know what, they can have their 255% gains now, because whenever there's a big bull market like in 1999 or 2003 or even from 2004 to 2007 like we had, they're going to blow up like one of these guys did during a bull market by being a short-only guy who's actually doing really well right now. Well, I would hope you'd be doing well right now if you only focus on the short side. However, this guy is very rude, and I know some of you know who I'm talking about, but I did a lot of research about him, and he used to be a colleague of mine over at TheStreet.com, and I'm very happy to say that I'm not ever going to be a subscriber of his, but I just reviewed his strategy to see how he's got gains recently, and I gotta admit, you want to play that game, you play the intraday game. I like to focus on other things in my life other than the stock market 24/7, even though I am addicted to the stock market 24/7. However, I've come to enjoy some ANCIs from breakout bounce to the 90% gain in about 1 to 3 months. So in 3 months, you got 100% gain. Used to be 3 months, 500% gain. 3 months, 200. 1 month, 300% gain. If you guys remember, like the EGHT example. Let's go back to 2003 really quick so I can show you guys what used to be normal for me, but it still doesn't seem to be anymore. We go along EGHT here. Solid at the top. Got your 300% gain in 1 month. And then don't forget stocks like SIGM from March to June or July, whenever. Then, of course, Hill, which was, HIL back then, but it's HILL now. You can see it from March to August. The guys that are up a lot now from 2007 to now, I have realized, aren't going to ever get these kind of gains. They're never going to have a 320% gain in 1, 2, 3, 4, 5, almost 6 months. And they're never going to have a taser. Bottom line, they're never, ever going to have a taser. I am 100% certain of that. And even if you bought it here, and let's say you sold it here, you sold all of it right here, that's a 500% or 450% gain in 1, 2, 3, 4 months. 4 months. 450 double. 900%. 4 months. To go along with all the other nice ones like Hill, SIGM, EGHT. Excuse me, everybody. I am still dealing with junk in my system, and I just don't know why. Whatever. I guess it's because my immune system's always going, as they say in MS. However, I listen to hear Neil Cavuto, and he doesn't sound like he has this problem. So anyway, I apologize, everybody, for making these noises. Getting old. So, FMDAY can't show anymore. Why am I drawing a blank in my head? Oh, IST. Oh, that's now MT, right? IST is now ETF. Let's go ahead and show you what that looked like in 2004. There's the buy signal there. And then show you how it works and how I like to hold stocks long, giving you a 2004 example instead of using 2003. You can't use 2003. Everything was good in 2003. All right, well, then we'll use that example. So from here to the top, from just low, lonely IST back then, which is MT now and here, you got a 237%. To keep going on because that wasn't the top, so I want to get you near the top. There we go. There. See, from March to December, there you go, 350%. It's 1, 2, 3, 4, 5, 6, 7, 8.5 months. Could have gone on a nice long vacation, come back, 700% gain on margin. That's what I like to do, folks. So I just want to make sure that that's clear, and that's why I do my style. A lot of people are like, well, Josh, you don't have 100% gains for each of the last 2 years. Guess what? A ton of people don't. Very few do. And I've noticed that those few people have gotten very, very cocky recently. And I tell you what, they should be embarrassed of themselves. Seriously. They should be very, very embarrassed. The person I'm talking about, I'm not going to say his name, but he should be ashamed of the way that he acts in the stock market. I've done some pretty bad things in my past, but nothing like what this guy's doing now in the stock market. So I don't even care who's up 200% right now, because I know whenever there's a real trend, you're not going to be up that much later on. I'm going to go ahead and be preserved. You want to make money now, you got to go probably for those, but whenever the real markets come, they're not going to make nearly as much as me. Now back for oil. Remember I told you it was going to be between 35 and 50. It got above 50 for a little while. Got above 50, hit 53, hit almost 55 intraday, and I was thinking, uh-oh, maybe I'm wrong. But now we're back below 50, so that 35 to 50 I'm going to keep using. Silver right at support at the 50 200-day moving average. This is where you're supposed to buy it. This is the 50 golden cross above the 200-day moving average. You're supposed to be buying it right here. Platinum, look at it. Hold on to all of the gains from that up 6% day. Just amazing. Gold had a nasty day today. Below the 50-day moving average. Still has a tail. Gold and silver and platinum, none of it can close at its low of the days. So I still see support holding above the March lows. So there's no reason to get bearish even short-term on gold. Remember, my hypothesis on gold is along for 20-plus years. No country has done what we've done and ever not seen their currency been destroyed. So I'm going to go ahead and use history as my guide, and that's why I'm a big gold fan for the long term. However, in the short term, the dollar isn't dead yet, folks. Look at it. It's still quite strong. I thought this was going to be the death of it right here. But look at us hold on in, saying that you shouldn't believe what everybody says and you should listen to your charts. Anyway, I'm going to go and wrap up part 1 right there. There will be a part 2. It'll probably be a little long, but we don't need a part 3. Aloha, everybody.